What is Fed? How to trade a FOMC Fed announcement. Hello traders, this is Igor from FX Igor YouTube channel, and today I want to share my opinion about something that happened yesterday. It was a FOMC announcement, and to talk about how you should trade when you have Fed announcement, and to talk about a little bit about Fed, because I never talk about that on my YouTube channel. So Fed stands for Federal Reserve System. It's a central banking system of the United States, and the Fed was established back from the 1913 following a serious financial crisis in the late 19th century and 20th century. So this is the some basic about Fed, and this is the picture of Fed building in the US. First, just to talk very short about structure. The Fed is governed by a board of governors consisting of 7 members appointed by the president and confirmed by the Senate. The chair of the board of governors is the head of the Fed and serves the public face of the organization. So we know something basic about the structure. Now, the Fed is responsible for conducting monetary policy. So the goal is price stability and maximum employment in the economy. So I repeat again, price stability and maximum employment in the economy. And Fed regulates and supervises the banks and other financial institutions. Now, when you talk about Fed, people always thinking about regulation, about bank holding companies, supplying money and credit, ensure smooth functioning of the payment system, and people always make equal Fed and government bank. Something like that. 2 things are very important. That Fed can do one important thing, clearing and settlement of payments, and another one, that the Fed operates independently of the federal government. So this is 2 very important facts about Fed. What I'm talking about it, because we need to think like traders, and what Fed and FOMC are important for us. So you know about Federal Open Market Committee, FOMC, and they regularly assess the state of the economy and make monetary policy decisions. You know that. And what we want to know is that if the Fed wants to stimulate economic growth and employment, it may lower the interest rate to encourage borrowing and investment. And lower interest rate make it cheaper for businesses, individuals to borrow money, which can lead to increased spending, investments, and economy activity. So please just watch this chart on the right side. Just watch this, and you can see how Fed can play with interest rate. And if the Fed wants to stimulate economic growth and employment, it may lower interest rate, because a lower interest rate makes it cheaper for businesses, and lower interest rates can lead to higher inflation, etc., etc. But if you have a high inflation like now, my friends, we need to have another plan. So if the Fed wants to slow down inflation, cool off the overheating economy, it may raise interest rates to reduce borrowing and investment. So it's very simple. You want to slow down inflation, you raise interest rates. This is the right moment. In 2023, we have a problem last 2 years with inflation, and we want to make inflation lower. And what we do, we increase interest rates. So higher interest rates lead to slower economic growth and higher unemployment. So this is the trick, how to do, what to do. Should we increase or decrease or make it equal? What we should do? It's a complicated. It's not so clear. And every single movement of the Fed and FOMC committee, every single move can make economy better or worse. It's not clear, and sometimes they need to optimize. So the Fed considers a range of economic indicators such as inflation, GDP growth, employment, and after that they make decisions about interest rate change. And that Fed also takes into account global economic conditions and other factors that may affect the US economy. So right now, I think the whole world have the problem with inflation. So we need to find a solution. What is important for our traders is February, March, May, June, July, September, November, December. This months, please remember, just put it down somewhere, because every single year you know exactly the day when FOMC committee will have some voting, and These dates, like I said, February, March, May, June, July, September, November, December, important us. And now we are here. I will just share my opinion. It is my strategy, and it's you can make your decision, maybe have a different view. I will just share how I operate, and what I do during the FOMC voting, during that speech. And so please watch this. February 1, 2023. It was a FOMC committee, and what is important, how I do and what I do is that I have two strategies. The first one, if I feel what can happen and what should happen, people are always, I can say 90% of the time, you know what will happen. Because in FOMC decisions, you in 90% know what will happen, because FOMC committee will tell you what they expect and what can happen. And usually this vote system and everything, it's not surprise. I just want to tell you. For example, last year they said next 6 times we will increase interest rate, and they increased. Maybe they miss some moment to increase, but when they have a plan to do something, usually they will make that plan happen. And what I can say is we already knew that there is a high probability that FOMC will increase interest, and they did. They increased for 0.25%, and you can always make a buy or sell order. However, if you know that the FOMC will increase interest rate, increasing interest rate usually should be strong dollar. However, you can see this is a British pound dollar chart. The same is for euro dollar. This is the US dollar week. Why? Why is that? It is because during the speech we heard that they making progress in bringing down inflation pressures, because they have a progress there. They're happy with that. They will stop to increase interest rate in the future, and because of that, US dollar will be weak. Now this is a little bit crazy. So I just want to share this opinion. FOMC as a FOMC usually will not change the market so strong. The thing is, what they change the market is future decision. Look this. If I know that today FOMC will increase interest rate, this information is not so important. Do you know what's important? The most important thing, what will happen in 1 or 2 months when the FOMC make new decision. And this prediction, this projection, it's most important. So I will just show this chart again. This is the chart from the yesterday. FOMC increased again interest rate, but during the speech they told, we do not want to increase interest rates next time in May. No, we don't want to do that. And because of that, we know, for example, that there are problems in the US economy. We know about Silicon Bank bankruptcy. We know there are problems and problems and problems. We know that inflation still exists, and etc., etc. And we know that the next time we will not increase interest rate in May. There is high probability for that. And when you know that and you have that kind of information, that impact the price. And because of that, we can see weak dollar and the bullish trend for euro dollar. So I will back just again about this. What is my strategy? So I have two strategies. The first one, I just a couple minutes before the speech, I just make buy or sell trade. Usually that trade is based on the fundamental shape of the economy, and usually I follow the main trend, and I expect to be what expect should be. So if I expect interest rate increase and expect something that will tell, I will just follow that and make some trade before. Or in my second strategy, what I can do, I can just wait the speech finished, see the last hourly candle, and if it's a hourly candle is a strong bullish and I believe in that trend, I will make a buy trade. But I never never make the buy or sell trade just because of this speech. I make a buy or sell trade based on the either technical analysis, either the fundamental analysis. There's a lot of triggers, and this is just the moment when I make a trade because I see that the market is in my direction. So this is the two strategies. One hour after the speech, and another one just a couple minutes before the FOMC, and that I create is very simple. And usually, like I said, the trend will be correlated with the shape of the U.S. economy, some broader look, and the future expectation rather than current interest rate hike or not. So when we talk about FOMC decisions, we talk about interest rate, I can tell you and give just my opinion that most important is future prediction and the state of the economy, and this is the most like I said, most important thing. And you always think very broad when you talk about FOMC and FOMC decisions. So this is all. I wish you a great day, and bye bye.